The item on the agenda, the city manager and our city auditor are going to make a report on purchasing cards issued and updating controls. Mr. Rumbelow.
Thank you, Your Honor. In March of 1998, the city of Grapevine adopted P cards to expedite and simplify the purchase of goods and services. At that time, that was done to replace open accounts at merchants. I will say purchase cards are the same thing as a credit card. Employees use those to purchase goods and services with a single transaction limit under $3,000. Just by the way of background, the centralization of the purchasing process meant that department heads and supervisors in those departments from 1998 to today manage compliance with P-Card's policies and procedures, with the P-Card policies and procedures. Obviously, on an annual basis, that program, since that time to this day, is subject to and tested for compliance with the city's annual audit. Finance discovered that we had an issue after our external auditor questioned the purchase of Parks and Recreation of gift cards that were purchased in that program or by that department. That meant that the internal auditor in September began to do a deep dive into the purchase card program. They expressed to me, to Jennifer, a concern about the usage of Kevin and Ruth's P card in October. Subsequent to that, Kevin was put on notice and Ruth's P card was turned off. Our response to that was to go out to a third party, the Weaver firm, and hire a forensic auditor to answer three important questions. One is, did Kevin and Ruth use their purchasing card for personal transactions? If so, how much? Secondly, are there other similar problems in the program, meaning the purchase card program that we have and had at that time for 22 years? Third, what recommendations would Weaver make to tighten the program controls in the purchase card program? They finalized their report. I took the sections of the report that were meaningful, that spoke to what Weaver believed that Kevin and Ruth did, provided it back to those two individuals, and gave them basically a week and a half to come back to us and say the report's wrong, or, I can justify that. I can tell you that in Ruth's case, that didn't happen at all. In Kevin's case, it was not sufficient. So, again, in February, having had our own finance department do their work, having had Weaver do theirs, it was clear that we had an issue. Weaver made recommendations, which I'll get to in a moment, but it was clear that we had an issue with personal use of the purchase card by those two individuals. I called them in the next day. Matthew had previously prepared restitution agreements in the amount that were recommended by Weaver in the Weaver report for each of those two individuals, and they both resigned that day and signed the restitution agreements in the amount, again, that comports with what Weaver's recommendations were. I then went to you all, as you know, gave you a copy of the Weaver report, did a Q&A of the complexity, because the report is complicated. There are parts to it that we all might wish were done a little bit differently, but the fact is that was the forensic auditor. That's what I was using to make the decisions, and I did that. I came to you all, told you what had occurred, why it occurred, the actions that we took about, and also about the restitution agreements that both those employees signed, and from that standpoint, that everyone knew. Now, I will say this, again, the Weaver report, Weaver was important to me because I felt like we needed to go out and find an outside forensic third party to do a report that said, you know, I mean, do we specifically, are we right? Is finance right? Do we specifically have an issue with those two individuals? And then further, I mean, is this a problem that is beyond those two? And I say that because obviously, if you're an employee of the city relative to purchase cards, I mean, again, that program is over 20 years old. The policies and regulations that govern the manner in which and use of which those cards can be utilized by the staff is clear. It has been clear through the entire time of the program. But again, you know, there was a decision to be made there, and we did it. And so Weaver investigated, and again, for the period of October 2018 through November 2021, and reported on policy violation in their report, no business purpose and tampering of documentation. That's what they were hired to do, and that's what they did. They recommended back to us, to me, that we recover the no business purpose and tampering of documentation amounts from both employees, and they identified in their report what those were. And of course, that's what we did. Again, we followed their report closely. We had paid for it. We asked for it. We felt like that they were the subject matter expert, and so we followed their recommendations. Further, the city's internal auditor had pulled data on all the purchases during the period and provided it to Weaver's forensic team. Subsequently, we had it as well. What that means is that whether it's Chase Level 2 data or information that she was able to pull off the internet, even though the Weaver report may have confused the buckets a little bit, we were not confused about what the personal spend was for either of those two employees. There, again, you'll remember from the report that they're inconclusive and no documentation categories. Again, our own finance department did a really good job going through every one of those transactions. We had the benefit of that information, and we could use it and did at a staff level to make sure that we agreed with what Weaver was recommending to us. And we did that. We spent a weekend up here doing nothing but going through all the transaction data. At the same time, the Weaver report and the information that we had pulled, which was some 1,200 pages, to look at all of those transactions, because we needed to be right. And we needed to be right because we were fixing to take an action that we haven't taken. It is rare in this organization to fire one department head or to allow one department head to resign because of some type of bad behavior. In this case, we had two. And so it was important to me, would have obviously, I know is important to you all, important to the community, that we get it right. So the amount of effort that went in by our finance team, by our city attorney, by the city manager's office to get this right was really important. And so, and that's what we did, obviously. When we got through that process, I'll tell you, Mayor, I mean, that was the day that I came to see you and talk to you about what the findings were, informed you about the Weaver report and about what was going to happen the next day. And that's exactly what we did. Kevin Mitchell obviously retired. He has repaid the $33,359 that we could justify as personal use. Ruth Kiego is obligated by October of this year to pay $24,916. I'll say further that we wanted, again, for Weaver to make recommendations about things that we could do to tighten the purchase card program going forward. They did that, and we've addressed all of those items in the Weaver report. I will say this too, and I think it's important, and it was one of the foundational questions that we were looking at, which is, are there any other material issues with purchase card users beyond Kevin and Ruth? I'll tell you that they did not find any. We have had, and I'll get to it in a minute, as will the auditor, our outside auditor who is here, no material issues with P card users beyond those two and what they did. obviously, there's a, there again are recommendations from both our forensic auditor and our audit firm that we improve the process. We've done that. And this next slide just simply says that if you use a P card, a form's going to be generated that will be sent to you that requires you to describe, justify, state the amount, and upload the receipt and the account code, and then sign the thing digitally. That'll happen for every city employee, for every P card transaction going forward. Secondly, obviously the form goes to the supervisor. That part stays the way that it has been, but a new part is that where departments were responsible for the P card process, this changes that to some degree, really to a great degree, honestly, because the form will now route to finance for approval and signature. So every P card transaction will both go through the supervisor, as it is always done. It will also go to finance for their approval and signature. It's just, again, it's an improvement. It's one that'll make sure that there's a double check on every P card expenditure going forward. If a transaction is questionable, finance sends it back to the department for additional detail. If it's still questionable, it's going to come to us, and there's obviously a problem that occurs if that happens. So at any rate, I have gone through that quickly. It may seem like a simple improvement process, but it's significant, again, because it shifts the management of the P card process from the departments to the finance department and ultimately to the city manager. So in summary, every department head transaction has to be approved by finance. Staff level transactions are approved by the department user and finance. Any questionable transactions, again, come to the city manager's office for resolutions. Additional transactions were sampled all across the departments by Weaver, again, so that's the forensic auditor, by Patillo, Brown, and Hill, who's here this evening, who is our outside auditor and has done the city's audit for years, and our own finance department. No issues have been found. No material issues have been found relative to the P card process. So what I'm saying is the misuse of the P card is contained to two individuals. I will say this, when you're looking at as many transactions as what were reviewed by Weaver and ultimately what were worked on and provided by the city's internal auditor, there are literally hundreds, if not thousands, of transactions. So, but again, to the degree to which we could understand all the buckets that were identified, we did that. But let's say that we're wrong and that there's something more that we didn't catch, that there's another area that needs to be worked on, and we'll continue to refine this process as we go forward. We do have a crime insurance policy, and the carrier has been put on notice of a potential claim. You do that because this is a complicated problem, and you hope that you got it all. We had a defined study period. We felt comfortable with the work that was done, but we also needed to make sure that if we missed anything, whether we go back further in time or whether there's any transactions that got missed of a material nature, that we have the ability to recoup those funds from our insurance carrier going forward. And that's why we put them on notice the day that we separated from Kevin and Ruth. Your Honor, now I know Mr. Boyle has some things to say, and then obviously we have Todd Pruitt with Patillo, Brown, and Gill here. I'd be happy to respond to any questions if you all have them, or we can go through the presentations and we can do them after everybody presents, however you choose.
All right, I think most of my questions may go to the accountant, but part of the problem is looking at the audit report. You say part of the goal was to determine how much, if any, was used for personal expense. Audit report is supposed to answer questions. This audit report creates more questions than it answered. I'm not a CPA, but I took 50 hours plus accounting in college. I spent over 3,000 hours towards my CPA and doing audit work 50 years ago. And so I know a little bit about it, but I can't look at this report and really make things balanced or tell a whole lot about it. It looks like it's a lot worse than what maybe it appears to be worse than what it really is from what you're telling me from additional studies. But if that's true, I don't think we can leave it like that. I think, the auditors need to look at further, and they need to document it and answer those questions for the council and for the public. So I don't think we can just leave it with the Weaver report. I know documentation, for example, she used one example of receipt that she couldn't identify what it was for. And the reason why she couldn't, it was blurred on the end. Well, I worked with this in my own law office practice for several years. I go to Walmart, I get a receipt. If I don't copy it, that receipt will disappear in 2 or 3 months. So if IRS looked at it, I wouldn't be able to get the deduction because part of it's disappeared. It ought to be the law in this state. They ought to give you, vendors ought to be able to give you a receipt that's permanent. And then if I charge something on a credit card, it tells me what the vendor is. It doesn't tell me what I bought. So if I don't take the shipping report when it comes in and save that, I can't prove what I bought on a credit card. Now, if you're an individual and it's personal, it doesn't matter. But if you're a business, you've got to be able to document it for IRS. Then if I buy something for Lowe's, for example, it uses a code. They use that receipt at the cash register for inventory control. And so they have a code. They can tell what product I bought, but I can't in many cases. So the way vendors produce documents this day and time, it's a nightmare, I think, for a lot of us to be able to document it. But I would like to have known in the report why these couldn't be documented. Is that part of the problem? What was the problem? Because I know with, somebody in finance has to put a financial statement together each month. They have to allocate expenses to different categories. Telephone, electricity, advertising, employees, whatever it is. They have to put a set of books together. So they have to be able to know what was spent to put those items together. So somebody had to be able to identify what those charges for. This report doesn't tell us that. And so I think that's part of the problem. I think the report is incomplete and misleading. And I can't use it to tell how y'all computed the personal expense. And it was my understanding that under our policy, it wasn't just personal expenses that were used in the computation. It was also things they didn't have receipts for. Is that correct?
Sure, or anything that was tampered.
The public and the council can't use that report and make that computation.
I understand. I do.
So that leaves an incomplete report, I think, that has to be complete. We have to know more about what was examined, and what the problems were, and what the conclusions were, and how things were computed to really interpret the report and understand what happened. Anybody else have any questions of the city manager? If not, then go ahead and present your.
Yeah, I just want to ask one more question, because to the mayor's point, I think that's one of the things that's confusing is, for example, the newspaper implied that it was 200,000+. And so could you just address a little bit to the mayor's point about how the numbers look so high, and yet the report we saw, you had the list of what was actually required to be paid back. So I'm assuming that's what you could actually prove confidently was misused for personal. Is that correct?
Importantly, that's what Weaver said.
That's what I meant, Weaver.
But I will say, again, there's such a thing as called Chase Level 2 data, which is data that basically shows whether you have a receipt or not, what the transaction, when it occurred, what the number was on it, and what you used and what you bought. And so obviously both Weaver and our team had access to that type of information. So why they put the buckets exactly the way they did, I'm not entirely sure, but I do know this, that we paid them to do it, and we were going to rely upon what they had, what they gave us back, and I didn't want anybody to try to mitigate or interfere with Weaver's work or their report, because ultimately we knew that we were going to have to rely upon it to make decisions about restitution and decisions about separation. And we did. But what I'm saying is that our own team went back and did a ton of work around all the transactions during the period. So we know and can provide and break the buckets down further. Obviously, council will, whatever direction you give us, that's certainly what we will follow going forward. But what I want to say to you, again, there were issues of documentation problems. There were issues as it relates, at least to one person. There were issues of policy problem as it relates primarily to one person that made those numbers look more inflated than what they are. They did not use or spend that for personal benefit or personal gain. So at the end of the day, obviously, we relied upon the Weaver report, but we had access to information to know that that report was right. Again, if you take all those buckets and you say, well, I'm just going to add them up and somehow Weaver must be wrong. No, they're not. Again, our own team went through all those transactions and we're comfortable that even though it's not as organized as we might like, that for the most part, those folks used the purchase card for city business. In the cases where they didn't, they have to pay it back and they're losing their careers at the same time.
Thank you.
I have a couple of questions, please. Our purchasing procedures require that they submit a receipt for the transactions. And so when there were a number of charges for which there were no receipts, can you explain why Weaver didn't think that they should have to pay that amount back as well, since they violated the procedure on those?
Again, we had the benefit of the Chase data to know what they purchased. And where Weaver had a defined period of time to do their work and to get the report back to us, we had a longer period of time to study it.
So those were the transactions that you all were able to validate through?
Absolutely. Sure, we went through every one of those transactions.
So those are cleared up,
From,
so to speak?
so to speak, yes, ma'am.
And that was then identified as things that were city-related purchases?
Yes, ma'am.
Okay. When were our current purchasing procedures established, and do you know when they were last reviewed and updated?
Well, they're reviewed, again, sort of updated. Yeah, I mean, the one thing I would say is they've certainly been updated within the last 3 months.
Okay, prior to that.
Beyond that, again, are you talking about just general purchasing? Yeah, we look at that probably every couple of years as it relates to policy changes. But even within the last year, there have been recommendations that the internal auditor made. So we've been probably more intent relative to changing purchasing guidelines and procedures and updating them more over the last year than at any time in the 25 years I've been here.
And when did we first retain our current auditor? They've been doing our audit now for 3 years. I know we usually change about every 5 years or so.
It's been a much longer period of time than that. I don't know. Greg may know. Do you? Is Greg in the room? Why don't you come to? Okay. No, but I mean, it's been. Obviously Todd Pruitt will know, and he can answer that question, ma'am, if it's okay when he stands up.
Certainly.
Thank you.
And our internal auditor, when did she resign from the city?
Within the last couple of months.
Okay.
Yeah.
Prior to, I know she went to, you told me she went to work for Weaver and took a partnership position there.
Yes, ma'am.
Do you know if she had any involvement in the work product, the report that was provided to the city by Weaver, or
Yes.
was she?
Yeah, I mean, I'm not saying that, obviously Weaver did their report with their own audit team, okay? But everything that would have been produced by finance relative to the time period and the employees that are involved, all of that would have been provided to Weaver. So even though she may not have been physically involved, the work that she would have done prior to leaving is something that would have been provided to Weaver at the point in time at which they were engaged.
Okay, thank you.
Yes, ma'am.
I have one question. So you're saying the auditor's report, the independent auditor's report, from the standpoint of when they delivered it, they found issues and put them in large categories?
They did.
Because the newspaper article was fairly misleading. It sounded like there were hundreds of thousands of dollars not accounted for. And then you're saying further internal audit and from our team looking at it, we're able to break those amounts down, and you have a total level of confidence that the amount of money that we are getting back from those employees is the amount that shows without a doubt they misused the money.
Yeah, now, let me give you a caveat, right? Because again, we're talking about thousands of transactions, hundreds, I guess maybe 1,000 more or more. So let me just say this. I haven't been here 25 years by saying things that I can't do or prove. So let me be really clear about that. Again, Weaver's report recommended the amounts that ultimately were the restitution, were in the restitution agreements with both employees. We felt comfortable that they were right because we had, even though the buckets appear to be confusing, and I wouldn't be critical and am not of the newspaper and the way in which they report. They have their job to do. I've got mine to do. What I'm saying is this, that again, given the work that Weaver did, given the work that our own finance team did, our own internal auditor, I am comfortable with the amounts that were in the restitution agreement, or I never would have given it to them to sign. But, and this is the hard part, and it's the controversial part, and I get it. I respect everybody who's here that disagrees with this. We had to make a judgment call. We made it. We have insurance if we're wrong, because there is some degree of possibility that we could have gotten something wrong in this, or there could be something more that we don't know. And that's why, again, the day that those two people signed those restitution agreements, the insurance company was notified, the carrier was put on notice.
Yeah, I have a quick question. So every month, my lovely wife sits me down and pulls out our bank statements, our credit cards, and highlights stuff, and I have to take several hours, and she says, what is this? What is that? What is this? Right? Just like a lot of people here in the audience, I think a lot of people do that every single month.
Right.
And so I guess the question that I've gotten, and as you can imagine, we've gotten a lot of them, is why was that not happening with these individuals?
Because we trusted them. My point is, and we've trusted them since 1998. My point is that nothing happened differently in 2022 than what happened in 1998. It was meant for us to move away from open accounts at merchants to a purchase card system that would be managed by department heads and by department supervisors, and would be subject to annual checks through the audit process. Again, I wish I had an answer that was different than that. If we did, we wouldn't be sitting here.
Right.
But there's nowhere for me to run or hide from the way in which this program was set up and the way that it operated for over 20 years. It is what it is. Now, again, did we change all that? Yes, sir. There will be no more of that, which is a little bit sad, because we're relying upon people to do their job, to do it well, to be trustworthy, to run those departments, and to do it at a really high level. This is an organization that achieves and has achieved a lot for a really long time. That means that when we get talent, we get the best talent. People want to work here, and it's a destination organization because this is a town that is progressive, with a council that has real leadership, with department heads who know what they're doing and are subject matter experts. It pains me to say that the trust that we placed in these two individuals as it relates to this issue was misplaced. But it's my responsibility. I'm the one who hired them. I'm ultimately the one who made the decision about the restitution amounts and about the fact that they had to separate from the city. That's a responsibility that I bear, and I bear alone.
Well, you have to have trusted department heads. You can't do everything by yourself. They have to do that. And there were checks and balances in place, and they worked for a long time. And it took them a while, but, you know, if you want to circumvent the checks and balances, eventually you can do that, and that's what they did. And that's a sad thing, because they were two valuable employees, one a very long-term employee. But I don't want anybody in here to think that there weren't checks and balances in place. It's just they got around it, and now you've made it much more difficult for somebody to do that again.
Yeah, to the degree to which, again, the degree to which we can make it so that it never occurs again, we've done that. But,
Quick question, Bruno. Our annual audit,
yes,
and we do, we test compliance to the P-card program. How did that get missed in the 3 years that these charges were going on? It's just, is
Again,
the pile of receipts too big?
I would let Todd answer that.
Okay.
That's why he's here. But again, an audit is a look back, and it's a test of your the financial integrity of the system. It doesn't mean that they actually calculate every number. The city spends upwards of $160 million a year. It's meant to be a test of the city's financial system and reporting thereof. Todd probably has a better answer than that than I do, but again, as it relates to these two individuals, the sample that is done as a function of the annual audit just didn't pick it up.
So can you describe what that authorization process was before the additional controls were put into place? What was the process that the department heads would go through in terms of submitting an expense report and the review process, and how did that happen before?
Well, again, the process was, obviously, that it has to be for a business purpose. It's for a business purpose under a single transaction of $3,000. That a receipt and documentation is provided as a function of that purchase, and again, on an annual basis, the audit does a random sample of P-card users to make sure that we are that those purchases are in compliance. Again, the miss here is the fact that the P-card purchases for department heads were their responsibility, and they either got picked up through the annual audit, or they didn't. And if they didn't, it's not like they were looked at routinely by the finance department. That's changed going forward, obviously. But again, when the program was set up, it was set up so that it was for basically small purchases, or smaller purchases, obviously under $3,000 per transaction, and meant to be managed from the departments, by the department heads who were hired by the city to do that. Yeah.
So did we begin using P cards in 2018? I think that's when the Weaver audit went back, and is our
1998.
understanding?
No.
1998.
P cards,
No.
98?
Yeah, 98.
Okay. So why did they only go back to 2018 to check these transactions for Kevin and Ruth?
Because once we started looking at it, we saw a spike in the spend of both those employees that comported with those years. So that became the basis, and plus you have a defined period of time. It's difficult. You can't really go back 20 years. I suppose you can if you spend enough time and money to do it, but we had a defined period of time, and felt like that in terms of, again, based upon the historical spend by those departments and department heads, we saw a bit of a spike, and we wanted to go back and study the period for which the spike existed.
Thank you.
Any other questions? All right. proceed then.
Mr. Mayor and City Council, as a follow-up to the City Manager's report, I will just do a quick review of the protocol. Pursuant to Section 4.01 of the City Charter, Mr. Rumbelow is the city's Chief Administrative and Executive Officer, and as such, under C1 of 401, he is charged with the appointment and removal of all employees with the exception of the Chief of Police. And here in this case, when concerns were raised about the two employees by the city's internal auditor, the city manager immediately consulted with our office and the finance department. And the goal from day one was to get to the bottom of it and to get it right. And the first thing was who to contact and consult with for an independent review of these matters. And multiple qualified CPA firms were contacted. And at the end of the day, when Weaver was selected, the sole reason that Weaver was selected was because they were the most and best qualified amongst the group. There was a question raised earlier about what, if any, role the city's former internal auditor had in the Weaver report. I can state emphatically that that particular former city employee had no role on the Weaver team with any portion of the Weaver report, save and except for the work product she had prepared prior to her departure from the city. Save and except that, she had zero role in the team. Each and every one of the Weaver team members were discreetly and clearly identified. She was never on that team. Weaver was in fact engaged by our office and for each and every single conference call that was had and every single update that was had, every Weaver team member was identified. So what was Weaver charged to do? Weaver was charged to help us get to the bottom of it and get it right. Get it right from the city manager's perspective on his duty to deal with the appointment and removal of all employees. So in this particular circumstance, there were two primary charges. The first of which was, does the city have employees that do not need to be here any longer? And then the second charge was, if as part of that consideration of item number one, amounts were due and owing, what were those amounts due and owed? And when you look at the Weaver report and you look at every single page where those charts are identified, they identify two buckets clearly, and those are the two buckets that they said had to be repaid. And those are the buckets for which they concluded, Weaver concluded there was no business purpose. That's bucket number one, no business purpose. And then the second bucket was purchases for which the submitted documentation had been tampered with. So at the end of the report, amongst Weaver's 9 recommendations, they discreetly identified those funds for those two buckets for both employees. And both of those employees have either repaid the amount due or contractually obligated to do so, and there will be consequences in the event they fail to meet their contractual obligations. Back to item number one, it was ultimately the conclusion, as a result of the cumulative analysis of all of this, that those two employees did not need to be at the city anymore, and as such, they are not with the city anymore, and they are now former employees. That's the perspective from the sort of protocol and the process that was gone through. And the other part, just to be clear, when we talk about the access that Weaver had access to both the 1,200 plus pages that the internal auditor had prepared and the background discrete data that was available from the credit card companies for each of the purchases that were in question. And Weaver used both of those buckets of information to which they made their final conclusions as to those amounts that for which they concluded, in their professional opinion, there was either no business purpose or for which the documents had been tampered. With that, I'm happy to answer any questions.
All right. Matthew, the Weaver report talks about transactions with the Park and Recreation. There were 53 that they determined were no business purpose, and in the library 35. Do we have a rule or policy in the city that defines what's a business purpose or not? Or how did she make that determination?
So, Mr. Mayor, I'm unfortunately going to have to divide that question into two. Number one, there are clear policies that dictate what is and what is not a permissible purchase. That is a separate categorization from what Weaver defined in its own report, which is their own self-definition of no business purpose. And the Weaver report itself identified from their professional opinion how they define that term of no business purpose.
Well, I say that because she gave some examples of what she classified as not a business purpose. and a couple of those were $1,600 given to the Ambucks over a 2-year period for their golf course sponsors. So they were using the Grapevine golf course for the golf tournament. And they were bringing people in that were spending money and raising sales tax. We spent a lot of money for Christmas capital and for other things promoting the city. So to me, is that a business expense or not? I just wonder how you determine when you're looking at these categories whether it's a business expense or not. Do we have anything that establishes that, or is it just a person's opinion?
No, you do. For internal review, it's a question of compliance with the city's purchasing policy, and I believe the purchases you just referenced would in fact be in compliance with the city's purchasing policy. They were not, however, consistent with Weaver's definition of business purpose, and that's why I made the distinction earlier between those two defined terms.
Okay. Do we have any other questions of the city attorney? Okay. You have,
Yes. Todd Pruitt with Patillo, Brown and Hill is here. I'd ask him if, with your indulgence, Your Honor, to give him a few minutes to make a few comments and answer any questions you all have.
Thank you. I'd like to thank you for having me here tonight. And I'm basically here just to answer any questions that you might have, but I thought I'd go ahead and start by answering a couple of questions that I know you probably have, or that I would have if I was in your shoes right now. The first question I would probably ask is, have we made changes to prevent this from occurring in the future? We've had a fraud that has occurred. The first step is to make sure that you make changes immediately that will prevent that from occurring in the future. I've been provided the changes in internal controls by the city that they've made, and I can tell you that I do agree that if those changes are implemented, that would prevent these errors that have happened in the past from occurring in the future. I can't tell you that they have been implemented. I mean, this is all occurring in fiscal year 2022 right now that we're in, and that's outside the scope of our audit. So we haven't tested that those procedures have actually been put into place, and certainly not that they're operating effectively. But I can tell you that if those changes are implemented, that they would prevent those errors from occurring in the future. The actual testing of whether or not those have been put into place would occur with respect to your annual independent audit in next year's audit, fiscal year 2022 audit. The second question that I would like to address that I'm sure would pop up is, how does this relate to our annual independent audit, or maybe even why wasn't this caught in previous independent audits? And I'd like to talk about that briefly and answer any questions that you might have. I think the first thing to do is to understand what your annual independent audit is, what your auditors are doing, and then go from there as to how this fraud fits into all of that. Your annual independent auditors are really, if you boil it down, we have 3 reports that we're issuing. The first report is we're issuing a report on whether or not your financial statements that we're given are free of material misstatements. And I'll talk about that one last because that's probably the most complex part of it. So we'll leave that for last. The other 2 are fairly easy. The second report that we issue is our report that's required by government auditing standards. Those standards require us, your auditors aren't required to design procedures to identify any controls and deficiencies, any deficiencies in your internal controls. There's no requirement to identify internal control deficiencies. The requirement is if you do come across them when you're testing the audit and you believe they're significant, then you have to include them in your audit report. So with respect to this year's audit, you will have at least a significant deficiency over internal controls with respect to your P cards. The third report deals with your federal grant programs. None of these charges that are being talked about today were charged to your federal grants. So you'll have an unmodified or a clean opinion on your federal grant programs, and there's really no impact on these transactions at all that impacted your federal grants. But going back to your my original report that we issue, which is an opinion on whether your financial statements are are free of any material misstatement. I think that in general, there's what's called an expectation gap. You may have heard about that. There's a gap between, I think, what the general public thinks your auditor is doing and what they're actually doing if they're following standards. What I mean by that is, I know a lot of the public would think if there was a fraud that happened at the city and say someone stole $100,000 that your auditor would be expected to identify that during the course of the audit. And that's really not what we're doing. We're trying to make sure that your financial statements are free of material misstatements. So when you talk about materiality, what does that mean? You set materiality thresholds for your different opinion units. For example, I think all of these expenditures occurred in your general fund, and the general fund's opinion unit. Usually your materiality thresholds are set somewhere between 0.5%, say, to up to 2% of your total expenditures or total revenues. So for the general fund, you're looking at materiality thresholds that would fall somewhere around, I think, $700,000 is what we use, which is 1.2%. So all of our procedures are designed in order to identify errors that would be above that threshold. I mean, we're not looking for errors that are below, in the general fund, that are below the $700,000 threshold. So my answer to that would be that the audit is not intended to identify fraud of this size. It's not designed, therefore, to identify a fraud of this size. So it can't really be expected to identify. That's not what we're doing in this process. If you look at there are three different people that have looked at this. Your city's internal auditor looked at thousands of transactions with respect to the P cards. Now you hired Weaver, who's a well-respected firm, to come in and do a fraud engagement. They looked at a lot of transactions, and we did our own investigation into it. All three parties, there were no transactions identified outside of those two employees that were suspected of fraud. And if you take all of the charges they had for the entire fiscal year, if all of them were fraudulent with those two employees, it comes up to not even a third of the materiality for the general fund. So I guess what I'm trying to say is that if you have someone, that an audit is not designed to identify a fraud of a smaller amount, that size amount in your general fund. It's really not what your independent auditor is doing, if that makes sense. Or does anyone have any questions about that process? I know it can be confusing.
When you're doing those regular audits, you're doing them based on city standards or standards for municipalities for audits, right?
Correct.
So I guess I'm unclear with the second point that you highlighted, and you mentioned an expectation gap, but I would have expected that in terms of the internal controls, that you would be testing our internal controls for weaknesses in them, which we clearly had, and we're looking to remedy. But how is it that in your testing of internal controls, this was overlooked up until now?
I guess I would say that we're not designing tests to identify any deficiencies in your internal controls. There's no requirement to identify internal control deficiencies. We're looking at your internal controls so that we can plan and perform our audit procedures. And if we do come across a deficiency that we think is significant, then we would report that. But in general, everything that we're doing is geared towards finding material errors in your financial statement. So we're looking at internal controls, in this case, over your general fund that could cause a material error.
It's also a testing of our internal controls, though? I mean, separate from the financial statements, because I understand the dollar amount that we're talking about would not trigger the materiality threshold there, but isn't the internal audit process also designed to identify weaknesses in our controls from just our day-to-day processes and how we're managing our funds?
No, you're not designed. We're actually not required to test your internal controls at all, other than with respect to your federal single audit. With respect to your grants, we're required to test controls over your federal grant programs. But just financial statement controls, your auditors aren't required to test controls at all, like they are in the private sector with larger companies. You have to actually test the internal controls over the financial reporting process and opine on that. But that does not, rules for governments are not the same. You have
Who
no
establishes
requirement to
those
test controls.
rules of the requirements that basically does not require you to test our internal controls? Is that
Correct. We are not,
who issues
your
it?
independent auditor is not required to test internal controls at all, other than internal controls over your federal grants if you spend over $750,000 of
That
federal
direction,
grants.
does that come from the Government Accounting Standards Board, or what entity defines what you should be testing?
Yes. I mean, the government auditing standards, which are issued by the OMB, give us but there's no requirement to test your internal controls
So
at
your-
all.
your
Now, the
audit
time
is-
that your auditor might decide to test internal controls, but it's really only if they think it would be more efficient to test an account balance. In other words, we might test your controls so that we can reduce the amount of testing or substantive testing that we have to do over an account balance. But in general, there's not a lot of internal control testing that is done over the financial statements. There's some, but again, it's usually being done to lower the substantive test that you would be doing in that area.
What entity establishes the $700,000 threshold?
That's the OMB, the Federal Single Audit Act. If you spend over $750,000 in federal grants, there's also a very similar rule that applies to state grants. The process works the same. If you spend over $750 of state grants, then that throws you into the single audit process where you have to, your independent auditor has to test compliance over your major federal and state programs. And that process requires your auditor to test controls over those federal and state grants.
So the auditing that you do on the city's records doesn't sound like it's very detailed to me. So
As a layperson, I would say that it's less than what you might expect. I mean, basically, if you boil it down, we're looking for large errors in your financial statements that users of the report that would have an impact on the users of your report's decision making. I mean, and you look at your financial statements, you've got $730 million of assets. You've got, I forget what your total expenditures are, maybe $170 million of revenues. I mean, if you're looking at materiality thresholds between 0.5% and 2%, I mean, your materiality thresholds, like I mentioned earlier, are larger than you might expect.
So your audit responsibilities for us each year are at a very high level.
Exactly.
Very high
I
level.
would say
You
that.
would never get down to the microscopic spending.
For example, if you had if I found a $500,000 error in your general fund, I mean, that's not material under our standards. Now, obviously, if I found that error, I would also go then look at what caused it. So you would probably have an internal control deficiency that I would report in your gas report. But yes, with respect to your financial statements, you're probably looking at materiality thresholds that might be larger than you would expect. And that's not us. I mean, that's across the board with
Do
all.
you represent other municipalities? Do you do other audits?
It's all I do is audits of local government, so
So is that
cities.
fairly typical to do? What you provide is really a very high-level audit. That's basically what you do?
I would say that it's probably at a higher level maybe than what the average layperson would expect. But I mean, basically what we're doing, the main goal of what we're doing annually is to make sure your financial statements are free of material misstatements. Whether that's caused by an honest mistake or fraud, it doesn't matter. Do they have material errors in them is really when you boil it down to it. Materiality thresholds are a matter of judgment, but industry standard is generally to use materiality thresholds that would be somewhere between 0.5% to 2% of revenues, expenditures, or whatever you're using for that balance. So,
Well, and I think you've been doing our audits for a lot of years, and I know I used to serve on audit committee with Chris, I think Leon's on it now, aren't you, Leon? So I understand the municipal government auditing. This is really an issue of internal auditing. This is not anything that you've done incorrectly.
Exactly.
Or you've done wrong, because you're supposed to look at the big picture when you're talking about $179 million worth of expenditures and income. It's a big picture, which is what you're required to do by OMB. So that's what's expected of you. This is more of an internal issue that we have that hopefully you'll take a look at, because we need to next year.
And that's a good point that I would make. If you're not relying on your external annual audit to catch errors below the materiality thresholds that they're
Right.
using, who does that responsibility fall on? Well, that falls on the city.
Right.
Which is why a few years ago, when we were talking to the city, that we recommended that you consider bringing on an internal auditor here, even though usually cities of this size, population-wise, roughly $60,000, you generally don't find an internal auditor at. You will find it occasionally. But really, if you look at your financial statements with a population this size, you've got a lot more going on than the average population of $60,000. So we recommended, and I think Greg was even already thinking about it, bringing on the internal auditor, which you did, and you brought on Nicole as an internal auditor. And I believe it was Nicole who found this problem in the first place. And quite frankly, had you not brought on the internal auditor and had that function here, I'm not sure that this problem would have been discovered as of today. Because it's really not, it really kind of falls below the threshold of what your internal auditor is finding. You might stumble across it when you're doing your testing, or more likely than that, 9 times out of 10, if you find a fraud that's this small, it's when you're doing your fraud interviews with the city employees, someone tips you off and says, hey, well, we always ask them, is there anywhere, not necessarily that you know of fraud, but even suspect of fraud? And you'll get somebody that said, oh, I think so-and-so, maybe is living beyond their means, or you might take a look at so-and-so. Usually it's a tip that you would get, that you would actually, if you uncovered something of this size, because it's really not what your annual independent audit is designed to do. And I know Nicole has left. I think she went to Weaver as a partner or director, or maybe a senior manager, I'm not sure. But that's one thing I would recommend, without, now you don't have the internal audit function, is that I would recommend that you hire another one.
Yeah.
And I know some of what she was doing may not have been all entirely internal audit work. She did some other special, but in general, I think she was doing a lot of internal audit work from my discussions with her. And I would recommend that you consider, replacing that role, because really, you've got large dollar figures for a city your size. Large revenues, which means large expenditures, which also means your annual independent audit has larger materiality thresholds. So you can't rely on your independent auditor to catch, relatively small type frauds. That falls on the city. So I think it would be a good, if I was running the city, I would definitely have an internal auditor in that function, and that's really where that falls on. And
Jim
in fact, she did catch this. I know it probably wasn't in year one that she worked here, but she caught it eventually. So I guess that process was working to that extent.
Mr. Pruitt, do you conduct our audit electronically? Is it partially electronically, and then you have a team that comes here and rolls your sleeves up and goes through various and sundry documents? How do you conduct the audit?
It's really a hybrid of both. I think prior to COVID, it was done all out in the field. Then after COVID, the first year of COVID, it was done all remotely. We didn't come out at all. And I'm not even sure if all of the city employees were working in the finance were working here or not, but we did it, I think, almost all remotely. And then the year after that, it's become kind of a hybrid. We do part of it remotely and part of it out here, just depending on what we think we need to do, what the city wants us to do, and what you'll run into some things that it may just be easier for the staff to pull them and let us look at them in person than to have to scan it in if they don't already have it available electronically. But I have other clients that are 100% electronic, and we do 90% of the audit remotely. So it's a mix.
Thank you, thank you.
Mr. Pruitt, the city produces a budget to the council each year, and they also provide what the actual expense was for the year previous and what the proposed expenses are for the year to come. When we receive those budgets and go through that process, we've assumed that every dollar was accounted for. Is that a fair assumption?
Every dollar is accounted for by the city or by your auditors?
All right. Now, for the period that Weaver examined, she looked at 341 transactions in the park department, and she found 176 inconclusive and 51 no documentation. So how did finance put a financial statement together without knowing what those things were expended for? Do you believe that is possible, that could be true?
Well, I'm not sure that I'm in a position. Now, that's probably a question for finance. So you're asking, can you restate the question? I'm not sure that I totally followed.
I mean, these documentations come in on a regular basis to finance to put together a financial statement. If there wasn't any documentation coming in from a department, wouldn't that be a red flag that should have been asked then?
Yes, it should never have been a situation where your department heads are approving their own expense reports, more or less. I mean, you always want someone else, hopefully a peer or a superior looking at it, but even if not that, anyone. I mean, just having the fact that anyone else is looking at it prevents 99% of things like this from happening, because you've got, they know that someone else is actually looking at it. So the way that process should obviously work, if you should not be reimbursed if you present an expenditure report that doesn't have supporting documentation, so you can verify that it should be reimbursed. I mean, the city itself during the year is not preparing audited financial statements, so they're not auditing any of this information. But yes, to answer your question, I mean, you would want that to be being approved by someone, ideally. I mean,
somebody would have to know how to account for that money, would they not, in finance?
Sure. I mean, you would. You want your internal controls. You want to design your internal controls where, if an error, whether by honest mistake or fraud occurs, that someone within the city would catch that and prevent it from happening. Here, that wasn't done with respect to at least a portion of your P cards. Why it was set up that way, I'm not sure. But apparently it was designed that way.
Have you ever in your audits encountered any expenditures in the city in any department that was inconclusive or no documentation for?
Well, I mean, I've been doing this for 28 years, so I've seen a lot of things, but so I can't say that I've never seen something like this. But, I mean, it certainly is not how you would design your internal controls in order to catch errors.
Is there other ways to determine whether the money was actually spent for the public purpose other than just receipts or documentation? I mean, we have financial statements for each year, and we compare those over the last 5 years, one year to another. It ought to be pretty obvious if that amount of money wasn't going for the public purpose. It ought to showed up to the park board, ought to showed up to the park staff, ought to showed up to anybody using the parks. If that same amount of money wasn't being used for the public purpose, it ought to have been pretty obvious. So I would think there's a good possibility, if it didn't show up that way, that most of this money was used for public purpose. What I'm really asking, is there other tests that can be done through comparison to determine in all probability how this money was used, either for business purposes or not?
Are you talking about the the part that both the city and Weaver kind of put into a I can't tell category, or?
Yeah, well, I'm just asking, isn't there other ways to make comparisons to give us some indication of what happened to this money, other than documentation?
Yes, there could be some analytical procedures that you could design to see maybe if, but I don't know that they would be conclusive, but you could maybe draw some conclusions from looking at some analytical procedures. I mean, ideally, you wouldn't, pay expenditures at the time without having supporting documentation as to what they were, because the further that time goes on, it's harder to get that actual documentation. It's my understanding that a lot of this documentation, from talking to Nicole, that she was able to get from third parties to see what was, and I think that's how she originally discovered that this was happening in the first place. But a lot of that, what we were doing, from our standpoint, you were kind of approaching it as, okay, we have 2 employees that we know we have some suspected fraud going on. So, the one, do we have a control deficiency that we have to report? Yes, that's automatic. So there's no more testing to do with respect to that. 2, or your financials, 2, none of it was charged to a federal grant. So there's no additional test work that we have to do there. And then 3, can we give an unqualified opinion on your financial statements? And again, if every dollar that those 2 employees charged their P cards was fraud, which it probably wouldn't be, but even if it was, you're looking at less than a third of the tolerable misstatement that we can have in that fund. So we did a lot of testing to see if there were any other employees that had suspected fraud. I think all 3 of us, and we were, us and Nicole did that, and we didn't find any other suspected fraud from any of the other employees. So,
did y'all follow up on the Weaver report and look to see if you could answer some of the questions that they created?
I've read the Weaver report, but basically everything that we're doing is what we're engaged to do is geared towards the 3 things I just mentioned. How does it impact the 3 reports that I'm issuing? Do you have a clean opinion in your financial statements? Is there a reportable control deficiency that we have to include in our government auditing standards report? And then was any of this charged to federal grants? So everything we're doing is geared towards answering those questions. If there are other questions that pop up, like what would be your estimate of the total dollars that were spent on things that they shouldn't have been spent on, that's really outside the scope of what we were doing. Because everything we're doing is geared towards answering those 3 questions.
I understand that it's outside of your general audit, but you're an auditor. You're the city auditor. I'm just asking you, what could you do to make further evaluation to answer some of the questions created by the Weaver report?
So can we look at what some of those questions are that you're talking about that are in the Weaver report?
I'm talking about the Weaver report, and 341 transactions analyzed in the park department. Over 50% were inconclusive or no documentation. I'm wondering how the city put together a set of books, what they posted those expenditures to, unless it was a miscellaneous category. I assume there's other documentation that identifies what those were. So further evaluation ought to answer some of those questions.
Yes, I would agree with that statement.
All right. So we need to do that. We can't have the public record create a lot of questions about how our money was spent. We need to know. And we need to know, if there was no documentation, how our staff allocated that money and what decisions they made to be able to do that. If you don't know what you spent something for, how do you post it?
I totally understand what you're saying.
All right. So we can't just, in my opinion, we can't just leave the Weaver report to stand on its own. We need to know really more about it. I think that a lot of these questions could be answered with further evaluation. I think she just looked at documentations and that's all. I think probably finance had other information to give them some indication what that money was spent for. If not, then we've got a problem in finance.
That's entirely possible that she did that, and I haven't. And again, Nicole left kind of midstream in the audit, so after she left the city, obviously I haven't been able to follow up and ask her a lot of questions.
Can you look at the Weaver report and the questions that it created and put a proposition together of what y'all could do to make a further evaluation to answer those questions?
Sure, I'd be happy to do that.
And can you do so below the $700,000 threshold that you used earlier?
Yes, again, that's what we're doing for your financial statement audit. But you can engage an accounting firm to look at whatever it is that you want to look at. I mean, you can set your own thresholds, and we could sit down. Obviously, the lower the thresholds that you set, the more expensive it is because it takes more time. So really, that's something that the city would have to sit down and you have to do a cost-benefit analysis of what we're doing here. I mean, how much would you want to spend in order to dive into this deeper? Because ultimately, you're probably unlikely to maybe uncover it. But if you're just looking at, we want to know more about, how much was really actually attributable to theft, then you could do more with respect to that. But I don't know that ultimately you're going to recover more money than you would spend looking for it. I mean, I would have to look at it and see, but that's definitely a consideration that you would have to consider. I mean, you don't want to spend X amount to recover a much smaller amount, if that makes sense.
Well, it was a surprise to me to learn that this type of thing would not be uncovered in our annual city audit. And it was a further surprise that you don't even look for anything unless it's like $700,000. So a mere $250,000 isn't something that you would find.
And I should clarify that you have opinion units. I was talking about the general fund because that's where these expenditures were charged. But each opinion unit has its own materiality level, based on the size of the fund. So if you look at your report, you have what's called major funds. And each one of those major funds has its own materiality level. And we're actually opining on each of those major funds individually. So you could get a clean opinion on your general fund, and you might get an adverse opinion in your hotel occupancy tax. They're totally independent of each other. So you have materiality thresholds for each one of your major funds set, and they're set based on the dollar figures that are in that fund. But in general, what I found, and they even have a name, and they call this the expectation gap with respect to the public. A lot of times the materiality levels are larger than what the public expects they are. But in general, I mean, they are set at somewhere around, I mean, even if you set it at say 1%, which would probably be a conservative materiality amount, in the general fund, you're looking at, what is that, $600,000 to $700,000, even at 1%. So they are perhaps larger. But you really have to keep in mind of what you're trying to do. I mean, your independent auditors are trying to make sure that the users of this report can rely on these financial statements. And what that means is you don't want a city just putting out financial statements with no one else looking at it, because that obviously they would have a conflict there. They could want to make them look better than they actually are. So you bring in an independent party or independent auditors to look at it and opine on them. But when you think about it, if you're looking at, say, your general fund has, I said earlier, maybe $60 million of expenses. Yes.
If I hate to interrupt, but
no problem.
We kind of have a hard stop at 7:30, and again, I just want to make sure that we do what y'all are asking us to do, and we'll go back to Patillo, Brown, and Hill and have them do a deeper dive on the Weaver report and bring it back to you all.
Well, Bruno, I got a quick question. I'm just trying to get clarification on something. So how did you did it come from these guys that you saw irregularities or internal?
This was identified by your internal auditor.
Are we currently looking for a new internal auditor?
Yes.
Okay.
Personally, I'd like to see finance give us a report in writing on how they accounted for these monies in these two departments when the documentation was inconclusive or there was no documentation.
Understand.
I would want to know how they allocated that and what other evidence they might have had to answer those questions.
Of course.
That might be the cheapest way to.
It would be, I can assure you.
Let's start there.
Because, again, what Todd said is exactly right. There's a diminishing return to this issue. You can spend $500,000 trying to figure out where.
I know. So I would want to know that first before
Right.
we
We'll do
ask
that.
our auditor to
We'll
put
do
a
that, Ron.
proposition together.
Yep.
If the answers are already there in-house, we need to know them, and they need to be documented so they can be considered with the Weaver report.
Yep,
If
I
that
understand
is
completely.
not conclusive, then we maybe need to have the auditor put a proposal together to look further and use other tests and accounting procedures to try to figure out what happened and why it wasn't discovered quicker.
Yes, sir. Understood.
And to clear up the interpretations of how the money was divided, I think it's just confusing to people, and we want it to be transparent. So
Understand.
clearing that up and breaking that down, I think will alleviate a lot of
But
that.
I also think it's important, I know you're trying to do a hard stop, but I think it's important that we recognize the people that are here in the community, the many emails that we all got, the calls. I got stopped on Main Street, at the rec center, people asking questions. And so I appreciate the fact that our community's out here and they want answers to these questions.
Understood.
And I also think it's important that the community understands that while Bruno has stuck himself out there, and I've talked to Bruno about this, to the mayor, you know, he shouldn't have done that alone. I think, just so you'll know, I believe that we should have been known about this back in October when it started, but we didn't. And I've already told Bruno he shouldn't be doing this alone. We're together as a community, we're together as a council and a city, whether we agree with what happened or not. It's important that we understand we need to respectfully know that he makes the final decision. While I may or may not agree with it, it's his decision, and we need to come together. And while I know a lot of people here are really upset, and I know a lot of people want answers, and maybe you want my head or Bruno's head, the reality is we got to figure out a way to come together and move forward, because this is not Grapevine. This is not that. This doesn't happen in Grapevine. It happened, and he's taking care of the problem. But we got to figure out a way to move forward and get past this. I appreciate the mayor pushing you a little bit further, and I think we need to figure some of this stuff out. But that's just, I think it's important that we say that, even though that I know that we're on a time.
Well, it's going to become a bigger problem in the future for all of us because of the electronic banking and transactions and the use of, we're talking about electronic currency now and all kinds of things. So we might well be on top of it. I think the lesson learned, though, you know me long enough that I don't like surprises. And so, you know, it would have been a lot better if the mayor had known more about this and the council earlier. I don't think we would have been here tonight. So hopefully that's a personal lesson that you've learned. Don't go it alone. That's why we're a team. All right. We are at 7:30 past. We've got an agenda of some public hearings that are scheduled for 7:30. How many people do we have registered to speak?
I have 12.
Huh?
12?
12, okay. We're going to call the 7:30 meeting to order and hear the public hearings because they're advertised for that hour. Then we have citizen comments on our regular agenda. We're going to hear those 12 after the public hearing. I'm sorry we don't have more time, but that's just the way it is. We're going to hear you, or if you want to have to leave, you can file a written report and it'll be a part of the record. So we'll get through the public hearing as soon as we can, and then we'll pick up on citizen comments.